All right, so we're just about at 12:30. So welcome everybody. Thanks for joining us for another Insights Time webinar. I hope you've all had a good summer. It feels like it's already done and dusted for another year with the weather we've got at the minute. It's been a couple of months since the last one we did, so I thought it might be a good idea just to introduce ourselves again. We've got quite a few new people joining us today, which is fantastic. So welcome to everybody. I'm Rich Beresford, Business Development Manager here at Giant Finance Plus. I've been working in sales to the recruitment sector for almost a decade now. I've been with Giant Finance for almost 4 years. With me as ever is Mike Boswell. Mike, do you want to introduce yourself?
Yeah, hi everybody. Mike Boswell. I worked in invoice finance for more years than I care to mention. Been actually with the business here for about 6 years now. We're growing it nicely and looking forward to catching up to date with you on all the things which we highlighted today.
Yeah. So today we are going to touch on a few different areas that we think will have been sort of impacting on recruiters over the last couple of months. So we'll look at sort of seasonality in recruitment and how that can have an impact on a business's cash flow, which is obviously crucial for any business, not least recruitment businesses. We'll look at the current state of the construction sector from a credit perspective and from a recruitment perspective. And then we'll look ahead over the coming months, talk about risk and how you can de-risk your business really, and just hopefully some sort of common sense advice really on how to mitigate that. We'll cover hopefully quite a bit in the next 10 minutes or so. So Mike, September already. I don't know about you, but that just screams to me back to school. Even though it's been nearly 20 odds 25 years since I left school. So one of the things we were going to talk about today is seasonality in recruitment, and education is a sort of a big sort of a big player there. So Mike, diving straight in, what can businesses in education or hospitality sectors, for example, do to mitigate the impacts of seasonality within recruitment?
Yeah, absolutely. Well, it's interesting because we talk about the summer, and let's not talk about the British summer, especially on this windy autumnal day today. I'm sure you're all getting the same. Yeah. The seasonality actually, you've got the run up into Christmas. You mentioned the hospitality sector. We're definitely seeing a lot of education inquiries at the current point in time as holidays. The beauty about the invoice finance, which we obviously play in, is the fact that actually, it turns the tap on for your cash flow. So as soon as you start getting people going out and working, you check their credit worthy, your invoice finance is going to fund that for you. So with the peaks and troughs, an invoice finance facility can mirror your cash flow quite nicely. The only thing to watch out for, though, is obviously how you invoice finance your charges. Now, if there's hefty minimum fees in there, and a lot of them do, I mean, I used to work for Lloyd's for quite a few years, which I didn't go into when we said at the beginning. We would say, we want £1,000 a month minimum fees from you. So when you're in seasonal business, if you go for 6 months of the year and you've literally got no placements, or even 3 months of the year, you're still paying that £1,000 a month on top. So your low percentage can actually start increasing very, very quickly. Whereas actually specialist lenders like ourselves, we've taken the option of actually supporting new businesses and existing businesses without putting a lot of extra charges on there. So we actually don't have minimum fees. So if you don't trade, there are 0 fees with us. And I'd advise anybody that if you think you're going to be seasonal, watch out, because those minimum fees in the months you're not putting through can really make the actual fee rate you're paying become a lot bigger very, very quickly.
Yeah, and it's that cash flow side, isn't it? There's going to be, in those seasonal sectors, there's going to be whole periods of time, weeks, sometimes even months, where there's just no income coming through for that business. So if you've got nothing really coming through, but a minimum fixed cost and overheads going out every month, then it's going to put you in a tricky spot. And I guess there's a sort of credit control aspect there as well, isn't there, Mike? But if your suppliers, if the clients you're supplying sort of shut down, for certain periods throughout the year, as they do in education, for example, then you're not going to get paid. You're not going to get paid either. So it's about having a good network and a good supplier who can help with that, and who understands the sort of sector that you're in, and can make sure that your cash flow is sound, and that you've got that money coming through the door.
And the credit control on that is even more important, because again, if you then stop supplying that customer, it's not like you can say, look, if you don't, if you don't get the money in, I'm going to have to pull the temps off the job. You've done the work for them. There's no one that you've lost a lot of leverage that you can get. So it's important that all your invoicing, all your order numbers are correct. You've credit checked the people you're sending the people out to, and the hospitality can be a bit interesting, because if you're sending security out to concerts, etc., you need to see who you're dealing with, and then making sure you're going to get paid at the end of the day. So it's making sure everything's accurate in the first place, and then rigorous follow up in the tail off to make sure the money comes into you.
Yeah, and you mentioned sort of credit there, and risk, and I guess that would sort of bring us on to the next thing that we'll talk about, which is the construction sector. It's been some big names in the news over the last couple of months that I'm sure a lot of people on this call will have heard about, and that will undoubtedly have, and possibly already has had, knock-on effects throughout the supply chain, and that's going to directly impact recruitment businesses. What can you tell us about sort of that over the last couple of months?
We've got direct correlation with that. Let's name names. The Buckingham Group, the big HS2 contractor, large capital projects around the West Midlands, obviously went into administration. We've got several clients that would probably have failed if they hadn't got all the credit protection and debt protection, credit insurance cover in place. So we flagged this on one of these webinars, probably late part of last year. Okay, salutary lessons are still very, very pertinent all the way through. More people go bust coming out of recession than going into recession. And when you think to COVID, that was like a mini recession. Obviously, we've got the increasing interest rates, etc. We've got now, which is another layer of uncertainty or cost or problems in the marketplace. So we were flagging it. I mean, I get regular updates from Allianz, one of the largest insurers in the world. They are saying at the moment that on the August run rates, the number of insolvencies in construction is double what it was last year, and on the run rate in the 1 month, okay, and if you do it on a rolling 12 months, it's still doubled. So we're not out of the woods yet, okay. It's a little bit after the horse is bolted if you haven't got credit insurance, because we're certainly finding that credit insurance is becoming harder to get. Although we actually do reasonably well, because we actually use our bulk facility is actually a brokered facility, so we're not with one particular insurer. So we can go out to the market and grab various pieces of insurance to give our clients the cover that they require. Because insured limits will run out with various insurers. They'll only go across the marketplace, all probably backs into Lloyd's of London, etc. So there'll only be a certain amount of limits on one particular customer out there. So the key is can you afford to insure? Well, my question back is, can you afford not to insure? Okay, which again is something we covered in a prior one of these.
Yeah. You talked a lot about risk there, and it might be worth for anyone who's listening here who perhaps isn't a director or involved in the management side of the business. It's probably worth just touching on what's involved in obtaining credit insurance, in terms of the costs and the cover that you can get, and how it does, alleviate that risk to a business.
I bet there's some people on the call that will be, we're working for larger companies. They'll say, "Our damn credit department! I've got this fantastic order. Yeah. Okay, these guys want 30 guys next week. Okay, and they're saying that I can't supply them because they're capping the limit." Now we are exactly the same. Okay, to our clients, we don't like to say no, because if we say no, you don't supply, we don't make any money. You don't make any money. Yeah. But It's all about protecting your business, okay? And if you come out of a large organization, or even if you're in a large organization, you probably won't see this because you'll be thinking, actually, then I haven't got that profit towards my targets, etc. if you're a recruiter. But when you're a small business owner, you actually have to come right the way across the other side of the fence to where until the money is paid in the bank account, the sale is not completed. Okay, until the money is in your bank account, the sale is not completed. You know, the easiest orders you will take is from people who's are not going to pay you. So we, for our clients, do act a little bit like the policeman. And you know, you must see us like that, because if we're saying no, it means that we can't insure it. We don't want to take the bad debt because we pass it back to you. Okay, if it does go bad and you haven't got an insured limit, and there will be caps going on there. And in this market, you've got to be so careful who you're dealing with. Credit check up front. Make sure you can get insurance if you can. Okay, to make sure that you get paid at the end of the day.
Yeah, and yeah, just to reiterate that point, Mike, like you said, you know, if with our charging structure, we don't have any fixed minimums or anything like that you said at the top. So if we sort of can't insure something and we don't fund it, we're not going to make any money. We you know, it's in our interest, I guess, financially, for us just to say yes and allow that insured funding to go ahead. But if we can't get that insurance, what we're saying no, we don't make any money, but we're doing that to protect our clients' interests. We're doing that to minimise risk to them, so that they don't get stung by companies such as Buckingham that have gone under.
Especially if you're a small company or actually a relatively new start, you're likely to struggle to get credit insurance. Now, because we're getting bulk policy, you know, number one, we get it cheaply, and number two, we can actually, you can just put your individual limits on us. So actually, you know, I've seen people recently that have come on board with us, whereby actually our whole facility, including us doing the funding and the back office, is virtually as cheap as them trying to get their own bad debt credit policy in place. So, you know, even if you're thinking, I don't need the full service, or there's elements of the full service I don't, you know, to protect your business. And I think once you understand the stuff that we do, because again, with the credit insurance, there will be steps that you have to take to administer the facility. Okay, so the insurers will say, if it gets to X amount of days past the due date, you need to send to final demand. You may need to send a final letter. You might need to send a legal letter. We do all that on behalf of our clients to make sure that we don't invalidate the insurance, or rather, we're actually complying to what the insurers want. Okay, because it's very easy if you take your eye off the ball and think, do you know what, they haven't paid me. Oh, hang on a second, I should have sent them a final demand or something. Because the insurers can then turn around and say, well, you haven't been doing everything which you want, which is in our process, so therefore you're not covered. Now, you have to be really, really careful of that. And actually, even if you're a large company, right, I suggest you to take a look at exactly what your insurers require you to do to make sure you don't invalidate your insurance.
Yeah, great tip, Mike, there. Yeah. So looking ahead, I guess something else that we should mention is interest rates. You mentioned earlier on that, you know, the sort of state of external economic factors are having a massive impact on businesses, and recruitment is no different. I think we're anticipating another rise this month from what the signs are saying.
The money markets seem to be thinking this will be the last one. American seems to be calming down. So, you know, this is not financial advice. My tips can go up as well as down. Put all the caveats on there, etc. Yeah. Don't come back and blame me. But yeah, I mean, you know, it looks like there's one particular. There'll be one more small base rate increase, hopefully, and then things will start moving through. But again, you know, the housing market's quiet. It's not getting brighter anytime quicker. The stock market's actually coming back up a bit, so they think it's going to be looking rosy in about 12 months' time. But that means don't take your eye off the ball in the medium term. That's my advice.
Yeah, so it's more important than ever, isn't it? Really, I guess, to review current finance situation. You know, whether it's overdraft or a bank loan that you've got, or invoice finance, as I guess a lot of people on this call will have if they're in the recruitment sector. Just always worthwhile reviewing it. Make sure you've got not the cheapest, because it's not about price, but the best option there for you. You know, it's not always about getting the cheapest deal, but it's about having the most effective facility in place for your business. Like you said earlier, you know, you want something that is flexible, that can grow with you through through the good and the bad times, I suppose.
Well,
So
the two things we mentioned there is limits on your bad debt cover can be a reason to look around. Increases in charge in your current provider, benchmark it elsewhere. Just give us a shout. We can obviously we can give you a benchmark price, etc., and see what we can do for you.
Yeah. Fantastic. Right, I think we'll leave it there, Mike. Thanks. Lots of webinars coming up from Giant Group. We've got some great guests lined up over the coming months as well on this Insights Time channel. So keep an eye out on LinkedIn, and there'll be email invitations coming out. I'm hosting a webinar as well, or chairing a webinar rather, on the recent umbrella consultation in a couple of weeks. So if that's something that you'd be interested in knowing a bit more about, again, look out on LinkedIn for that on the Giant Group feeds. But for now, thanks for joining us. If there's anything you'd like us to cover on any of our upcoming webinars, do let us know. Drop us a message, and we'll be sending out a recording of this as well to everybody that's
and any questions on anything we mentioned today, just drop us a line, and we'll gladly come back to you, or give us a shout, give us a ring. That'd be great. Yeah, fantastic. Well, thanks very much for joining us, everybody, and we will see you next time. Cheers, everybody.
Thanks. Bye bye.